Markets were on edge and stocks slid this week as we are just 5 days away from hearing from Nvidia. Can they save this market and bring the AI trade back on track? Or is this the beginning of the end? We'll discuss that. We'll also discuss the fact that you have many cloud providers, including Oracle and even the Neoclouds like Nebius, saw their shares tank over the past month. I'll have a discussion on that, and we'll discuss the opportunity that could create for investors going forward. There was a massive article posted on Semi-Analysis about Microsoft. We'll discuss their ambitions, how this relates to the industry from a data center perspective, and discuss the things you can learn from what they are doing. And then finally, Netflix shares taking a leg lower as they are rumored to potentially have bids in that Warner Brother Discovery, and we'll see which one of these companies ends up with it. I'm not convinced Netflix is going to be the only company of this group making a bid. We'll discuss that and more on today's video. What is going on, investors? Hopefully guys are doing well out there. Kick things off like we always do, though, with Meta Platforms. Start of the week at $628. This stock has not caught a bid in weeks as we ended 3% lower on Meta Platforms, well off the 52-week highs, closer to $800. Meta sitting close to $609. This comes as the company is inking infrastructure data center deals with not just homegrown, if you will, data centers, which we'll talk about here in a second. But they signed a deal with many subscribers know very well, and that is Nebius. This is one of these Neoclouds or these startup cloud providers. They inked a $3 billion AI infrastructure deal with Meta. This is set to go live in December. This helps Meta in some ways, and this offloads what is often referred to as capital expenditures, which obviously requires big, large buildings and construction and permanent employees. Instead, you offload this onto Nebius. They make some margin. They have to install the data center. They have to operate it. If a new GPU comes out, it's their requirement. Meta spreading this across multiple sites. We've seen this across all of these companies, particularly Microsoft as well. But at the same time, Meta is breaking ground, like all of these companies are, on their owned data centers. They broke ground on a 1 billion AI data center in Wisconsin, utilizing what they call dry cooling technology. Other companies, I think, call this kind of a closed loop system where you have water running through the system, cooling the GPUs, and it's a closed loop. So you're not bringing in necessarily large amounts of water. It's the same water kind of circulating around. Oracle is doing this for their clients, and it's kind of a newer technology, if you will, or it's an advancement on liquid cooling, and it is one way to have less of an environmental impact, but I'm assuming there's some cost perspective as well. We mentioned Oracle. It saw its shares crash 30% over the past month. I have on the free blog some discussions about Oracle. I have other pieces coming later this week. We're going to be talking about CoreWeave. We'll talk about Nebius. We'll also talk about this company called IREN. In fact, I've got almost all of that article drafted up. Like, look, 6 to 12 months ago when we were recommending these stocks to our clients, if you don't recall, on Equity Empire, we literally recommended Nebius to customers. This was almost a year ago in December of last year when Equity Empire launched. One of the stocks that we launched was with Oracle. If you were early to these names, you made a lot of money. But the thing is most retail investors have piled in late on these. In fact, when you look at the Oracle volume, you can actually see retail piled in on this one after the announcements with ChatGPT, whereas I think if you were a smart investor and you were doing your research, you got on this one way earlier than that. I believe going forward, you're not going to be able to buy these AI stocks sight unseen. You're going to have to be doing the research. You're going to have to understand more than just what signed contracts and those types of things mean. You're going to have to do the numbers and do the hard work. But I think if you're willing to do that, there's a huge opportunity. Meta wants its employees doing a lot of hard work, but they want them to use AI. In fact, they're going to be evaluating the performance of the employees with their usage to AI to improve their productivity as a core expectations, meaning if you're an employee over at Meta, you have to be using AI. And if you're not using it properly, they're going to show you how to do it. Now, if you want to get into the weeds and research, and I really think this is the direction with AI, AI's been easy money maybe for the past year or two. We're getting into the phase where it's going to be a lot harder. You're not going to be able to slap on YouTube and watch the guy do my 5 quantum stocks that I am buying. Yeah, maybe for a little while those quantum stocks go up, but then you're going to wake up and all of those gains are going to be gone. Mindless brain dead type content, mindless brain dump type research is not going to cut it going forward. You got to do the research. I'll include a link down below. If you want to read this engineering blog from Facebook, they went all into their generative ad model and how AI is generating ads and how it's doing it across systems, how it's affecting advertisers, how it's affecting users, the type of uplift. This is the type of research. If you want to pick stocks, you should be reading this on a daily basis. I appreciate you watching my YouTube videos, but one of the reasons why I don't post many more than this one is because I'm out there reading stuff like that. Moving on to Apple. Start of the week, basically where it ended, and in the 271 range, this one holding a level that it's really achieved for the past couple of weeks. You'll see that technically here. And I think the reason why is the company, like as many of you remember, a couple of weeks ago, they gave very positive guidance. In fact, double-digit sales growth when Wall Street was expecting, I think, kind of mid to high single-digit growth for the upcoming quarter. And China was not a region that had positive sales, but it appears that could be changing. Sales of iPhones in China soared 22% compared to a year ago. That's some momentum behind their product. And I tell you what, if that China region comes back, it's not just for Apple. So what I am monitoring in China is obviously as it relates to this show with Apple, but you have other companies that haven't been performing well from a stock perspective, the Starbucks and the Nikes, and there's a handful of others. And some of it is missteps that they've done in North America. There's some tariff stuff, but part of it is the China region just is not strong for them. If that rebounds along with their domestic operations, well, you've got some stocks that can run, and Apple seems to be firing all cylinders in China. This comes as the company plans to launch new features in the iPhone for satellite services. We obviously know that Tesla is making SpaceX has made a large investment here, and I would consider them probably one of the market leaders. There was that GSAT company that Apple relied on. It appears that they want to sell portions of their business. And we also know the next company that we often talk about, Amazon, making a huge investment there. Could be that Apple becomes customers of all of them. Now, moving on to Amazon. Start of the week at 250. This one drifting lower by about 6%. Broke an interesting area technically. It's not that the trend is over. It just brings in my opinion, more buying opportunities with Amazon. I'll show that to you in a second as shares closed at about $234 per share. Amazon and Microsoft are backing a bill that is making its way through Congress. And I am not, now that the lawmakers are back in session, I am not really sure the odds this legislation gets passed. It obviously has to do with maybe what gets tacked onto it and what other bill maybe gets packaged to it. However, White House officials and even Jensen Huang oppose this. That is because it basically gives American companies the first right of refusal to ensure American customers get access to key chips from Nvidia and AMD before other countries get access to them. The odds of this passing, again, I'm not really sure. I'll make sure I keep tabs on this, and we'll discuss that if it makes its way through Congress. We discuss OpenAI in the Microsoft segment for obvious reasons, but we'll likely add Anthropic a lot to Amazon because I know Google has an investment in Anthropic, but I believe Amazon's is even larger, and Amazon is tying a lot of their custom chips that are going inside data centers. Anthropic is the lead customer for those, and that is a big deal not only for Anthropic but also for Amazon. This comes as Anthropic disrupted what they call an AI cyber attack by Chinese-based hackers, which essentially did the bulk of the attack that wouldn't have been possible without AI. They were able to disrupt or thwart that. This is obviously something that cybersecurity companies are all keeping an eye on, And my belief is that a portion of your portfolio should probably have cybersecurity companies in them. I view them as kind of the new age insurance company, if you will. I think if Warren Buffett was 25 years old again, instead of maybe buying car insurance and these types of companies, not that that's a bad idea, but I think kind of the new age insurance company is actually cybersecurity. This comes as Anthropic is announcing a $50 billion AI infrastructure deal. This is across multiple companies, including Google and others. This comes as the company continues to track at a very reasonable level. They're controlling their costs, and they're planning to generate up to $70 billion in revenue by 2028. That is up from about $5 billion this year. The way this company is going to do this is not necessarily from $20, $30 a month from you and I. It's by licensing the API and the model to other companies. And that is, in fact, where Anthropic has a lead over competitors like ChatGPT. I happen to use Anthropic on a daily basis. I find it very good. While it doesn't have all the bells and whistles of all of them, for my needs, it's pretty solid. Moving on to Netflix, start of the week at 11:23. This one actually, technically, you'll see, caught a bid, caught a rebound, and then the story that I'm about to talk about hit, and we basically ended flat on Netflix. That comes as Warner Brothers Discovery, which is a public company that is valued at over $50 billion, is likely to gain bids from Comcast, Netflix, and my guess, if regulators would allow it, you could potentially have bids coming from maybe Apple, maybe Amazon, because when you're talking about this type of price tag, there's not that many companies in the world that can afford it. The reason why Netflix stock sold off on this rumor is that $55 billion to Netflix is in excess of 10% of the market cap. So they would have to come up with some financial engineering, if you will, in order to come up with a bid to buy this company. That means they're going to have to issue debt. They're going to have to issue shares of Netflix. That also means that likely means that the buybacks that the company has been doing would likely have to slow down. I am not convinced that Netflix wants to buy Warner Brothers Discovery. I absolutely believe they're going to poke around. They absolutely have a number inside of their head that they would pay for it. But in some ways, when you're Netflix and you're as big as you are putting in a bid to make the next guy have to pay up and pay a big fee for it. I think that's what Netflix is doing. If they end up for it, it'll be at a price that they wanted to pay, but it'll also mess up the financials to a certain degree, and some on Wall Street won't like that. Moving on to the stock of the week, and in some cases, the stock of the decade. Everybody's going to be talking about Nvidia next week, as it started the week at 194, just 5 days before it reports earnings. Shares slid by about 2.3%. The finished week at 190. Very logical level technically from Nvidia. You'll definitely want to check that out. This comes as the company was in Taiwan, I believe, meeting with executives of Taiwan Semiconductor, and he's wanting them to boost their chip supplies among the very strong AI demand that we are seeing. This pairs with a report that we saw maybe about a week or so ago where TSM is going to go to customers and saying, hey, we're going to raise the price of the leading edge chips by about 10 to 20%. So it looks like to me TSM is likely heading into a 2026, maybe even 2027, where they're going to raise the price and increase output. That is obviously beneficial for Nvidia and their customers, but what it would likely also do is accelerate the moment where we start to get imbalance from a demand perspective and a supply perspective. I'm talking about both the demand for the Nvidia chips, but also the demand from the data center. Right now, as most of you know, whether you're listening to the CoreWeave conference call or the Nebulous or the Amazon or the Microsoft, they're all saying we're turning away business. Business is coming to us and we have to turn it away because we don't have the capacity. If TSM makes more of these chips, the sooner that balance gets reached. Also, with Nvidia, there is far more demand for the chips than they're being manufactured. If TSM ramps up production, well, the sooner you get in balance. Most of the estimates that I have seen is that 2026, no matter what TSM decides to do, will likely stay off balance, which means demand will exceed supply. But how drastic it is, and as you move through 2026, it's all about what 2027 looks like, and that's something that I'm going to be monitoring on a daily basis. This comes as SoftBank unloaded their entire stake of Nvidia for $5.8 billion. Many people will remember this company sold its $4 billion stake back in 2017. If they had held that $4 billion stake, I believe that would have grown to over $200 billion. I saw some people incorrectly saying that this was maybe the end of the AI trade. Just understand what SoftBank is doing is they're unloading $5.8 billion worth of Nvidia chips to go invest into Project Stargate, which is an OpenAI project, and other companies that basically turn around and have to buy from Nvidia. Now, in terms of earnings next week with Nvidia, we're looking for revenue north of $55 billion. The high-end estimate on Wall Street is for $58 billion. You're looking for a Q4 upwards of $61.5 billion. In fact, some high-end estimates are for $75 billion. As you move into next year, believe it or not, there are high-end estimates over at Wall Street getting up over $100 billion. And if this company continues to print 75% gross margins, $100 billion could afford a ton of circular financing. I see a lot of people worried about the circular financing. Well, if Nvidia is doing $100 billion at 75% gross margins, and they can sustain that for several years, they can circular finance this industry for way longer than anybody watching this video combined can stay solvent. We'll see if that materializes, and we'll obviously keep an eye on Nvidia all week. Moving on to Google. Start of the week at 286 or so. This one down by about 3.7%. Finished the week at we'll call it 275. This comes as Waymo, the self-driving unit inside of Google. They launched their autonomous freeway rides. If you didn't know this, you could only take a Waymo on city streets. This was in the great city of San Francisco. Now, they've also expanded that to Los Angeles and Phoenix. This is obviously a big deal. This expands the service area where, if you're not familiar with Northern California, San Francisco is actually a relatively small, it's a very dense area of California, but it's a very small, essentially a tip of a peninsula, essentially, where there's a lot of work that is done, but actually not a ton of people actually live in San Francisco. Most of the population actually lives in what's referred to as the South Bay. That is San Bruno, San Mateo, Palo Alto. Palo Alto is where like Stanford University is. Mountain View is Google's headquarters. So if you're not from California, you're not familiar with this geographic region, most people refer to this broader area as Silicon Valley. San Jose, all the way down here, is where Intel is based. This is where all the tech companies have business, but to get from San Jose all the way to San Francisco, that's actually a decent drive. And the fact is, Waymo has only been operating on city streets in the tip of San Francisco proper, if you will. More recently, they've expanded the map, and then this week, they expanded it to the freeway. My argument is, and I think this is going to be accurate, is this is what every major metropolitan area, so it's Miami, it's New York, it's certain parts of Texas, it's obviously Los Angeles. If you want to go international, it's London. It's these types of places. Every major city, Chicago, Seattle, they're going to look like this going forward. And it's not just going to be Waymo. Tesla is going to be able to do this. Zoox, which is an Amazon company, that is going to be able to do this. Now, I paired this tweet with Uber. That is because Uber bulls on Twitter tend to only share the company slides, which only go up and to the right. If you're watching a financial creator, which just pulls slides from the company that go up, I promise you, I can find 5 slides that Tesla does not share anymore. That is because the slides don't go up and to the right anymore. The minute those graphs stop looking good, the companies stop sharing them. So my advice out there, if you're doing research, anybody that is only sharing company slides that go up and to the right, that person is not thinking about this deeply enough, and that person is not doing enough forward-looking research, because I promise you, the minute graphs start looking like crap, the companies pull them from the company sheets. They stop giving you the metric, like Netflix with subscriber numbers, with Apple, with iPhone sales units. I mean, the history goes on and on. But these three companies are going to be taking market share. They're going to be driving down prices, and they're going to be reducing profit margins in these units. If you live in these cities, it's absolutely fantastic. If you're an incumbent like Uber or DoorDash, it is a nightmare. Moving on to Microsoft, start of the week at 501. This one bouncing around. Technically, you want it to bounce around. This one up 1.75%, finished the week at 510. ChatGPT quietly launched ChatGPT 5.1, featuring a warmer communication style. I would assume they're trying to be a little bit more like Anthropic, which gives if you know how to prompt Anthropic, it's unbelievable how I can like feed it stuff that I've written. I'll feed Anthropic stuff I've written by hand, stuff I've said, like transcripts of videos like this. And then I'll tell Anthropic, here's what I want to write. And I press enter, and it is unbelievably accurate. ChatGPT, a little bit more mechanical and not nearly as accurate. My guess is they're getting to that point. Leave me down a comment. If you're a ChatGPT guy, I would love to know more about it. I use it a little bit, but I'm kind of more on the Anthropic and Grok scale. It doesn't mean that those are better. It's just where I've gravitated towards. If you're a ChatGPT guy and you've played around with 5.1, let me know down in the comments what you think about it. Now, Microsoft is firing up an AI super factory. This is big news, guys. And this includes hundreds of thousands of Nvidia GPUs. They're doing this actually across the country, and they're going to network this together with fiber optic cables, essentially creating supercomputers in multiple locations, but they can all be run in parallel. If you have a moment, semi-analysis, I'll make sure I have a link to this and the Meta blog down in the description below. If you have a minute, Microsoft's AI strategy, this was a really interesting article. I remember reading their articles about Microsoft. This was maybe 2 or 3 years ago. Microsoft was aggressively spending in the data center. And then what I believe is that the CFO over at Microsoft, I have a huge amount of respect for her, but she's very conservative from a financial perspective. She runs the company very well. Whenever I go through Microsoft's financials, I can't believe how well she balances off things like operating cash flow versus CapEx and the cash that was in. She does a fantastic job, but I think she hurt the company a little bit by slowing down their data center spending. So you had the finance team say, hey, Microsoft, maybe we're going a little overboard here, and the company dialed it back. Well, what it allowed is these Neoclouds, the CoreWeaves, the Nebulouses, also the Amazons, the Googles, and the other companies, they accelerated. And what it did was it actually allowed Oracle to land a massive contract with OpenAI. Well, Microsoft's re-accelerating their spending, and so that's interesting. That obviously applies a lot to Nvidia, and that's something that is going to go forward. Now, the other thing that I thought was interesting is we are now seeing OpenAI run advertisements, but also it appears that Microsoft is using social media influencers to hype up Copilot. This comes as you have like TikTok influencers that have millions of followers and like Instagram followers that are like sharing their experience with Copilot. So this is interesting. Obviously, Microsoft generates most of their money from software licenses and the enterprise. It's interesting that they're trying to like consumerize, I guess, if you will, Copilot. I just think this is interesting from kind of a market positioning standpoint, and we'll see how far they decide to go with that. Moving on to Tesla. Ooh. We swipe down and move this one in reverse. Those of you that have a new Model Y know what I'm talking about. The shares started the week at 434 and you didn't hit the drive stock because there isn't one. You swipe down and we went down 7%, down to 404 on Tesla. You want to see this technically. This comes as, what do you expect the chair of a company to say? But they say Tesla's on the cusp of this largest value creation event in history. And I do think, like, even Tesla's worst critics would tell you, yeah, this is a turning point for the company. If they can somehow figure out to make the Optimus robot like this beautiful thing, and it certainly appears on the surface a beautiful product, can they sell that to tens and millions of people? They've got the self-driving, which again, I have used. I've criticized in the past. I think it's good enough. It's definitely safer than everybody watching this video in terms of driving, unless you're Jeff Gordon or some NASCAR driver. And from a distracted driving standpoint, it is safer than anything on the road. So I think they've got the tools and the ingredients. The questions I have about the robot is Tesla is going for a high-end, beautiful robot. Is that what the market wants? I understand that if I'm going to buy an Optimus for my home, you probably want it to look more like the iPhone rather than some piece of junk. But if I'm Amazon or if I'm a big corporation, I'm a home builder, I don't necessarily want the fanciest looking robot with all the bells and whistles. I just want the robot to pick up the box and move it. I just want the box or the robot to hammer in the nail or get on the roof or move the wood. And so Tesla's going the same route they did with electric vehicles. They went to the high-end electric vehicle at first, and then they trickled that down to a, quote, more affordable model. I'm assuming they're going to be doing the same thing with the robot. They're going to the high-end version of the robot first. You perfect that, you get economy of scale there, you get first adopters buying it, just like they bought the Model S or whatever, and then eventually you can make, quote, cheaper robots, more industrial robots for the industry. We'll see if that's the strategy. Now, Elon Musk sees paying Tesla owners to create a massive shared AI inference capacity. This is because inside of every Tesla is actually a very, very high performing GPU. In fact, newer Teslas are the only ones capable of running their their newest version of their self-driving software. And I actually own two different Teslas. One's on the old hardware, one's on the new hardware. So I actually get to play with both of the kind of the new software and the, quote, old software. And there are differences. Elon Musk saying that each car essentially has a Blackwell GPU equivalent of power. And so you could string these things together and create this kind of distributed computing platform. Elon Musk says a lot of things like this, like, hey, you're going to be able to turn your car over into the robotaxi. So everything is years and years away. It's theoretically possible and it's interesting for Tesla, but I don't necessarily think that's something that'll happen in the short term. What is happening is the company is raising huge amounts of money, and this is XAI. They raised $10 billion in September, raising the valuation of XAI to $200 billion, and they elevated the round to another $15 billion. This all comes as the company is going to buy GPUs. When we see the spending that Meta is doing, in some ways, Mark is also competing, believe it or not, with XAI, because if you look at the roadmap over on Twitter, I don't believe that that platform is going to exceed like an Instagram or even like a Facebook. But Mark can't sit around and watch Elon Musk pour all the AI features into Twitter. He's going to create like a money or a payments app. They've invested into chat and encrypted chat and voice messaging. That obviously plays into what they're doing over at WhatsApp. So Mark has to, at the very least, maintain parity with XAI, let alone the TikToks and the other companies in the world. And so this is spurring some of that investment. XAI gets to do it privately. Meta has to do it and suffer through some of the stock price declines. I do love the features that XAI is layering into Twitter, which is obviously showing my age a little bit because that's not even what it's called anymore. However, I love the investment that Meta is doing, and I think in the long run, it's going to pay off for both companies. Now, let's move over to the technical segment of the show. We'll get to Apple here in a second. This is looking beautifully technically, folks. We've left this orange line on because this was a micro trend that we were on. After the tariff kind of dump and we got back to normal technically, we had been making a beautiful series of higher lows. This is on the S&P 500. Well, a couple of weeks ago, you might remember on the show, we broke through it, but we don't take the line off. That is because when you break a upward trend, you come back and did a back test. Now, what was interesting about the S&P 500 is it did a full back test through the intermediate channel and all the way back to the top of the channel represented by this red line. Now, more recently, what was interesting is we broke through the intermediate channel. So this gold line, this trend is over. You have broken through this actually on 3 occasions. But the reason why I leave it in is very nicely, you come back and you do the back test to the bottom of that trend. What I thought was interesting is we were not able to back test above the previous highs. Now, I know we're getting into the weeds a little bit technically, but we still have made a low, higher low, and I would assume that's close, but you are still making a series of higher lows. It's probably good enough from a standpoint. In the micro trend, this doesn't mean a whole lot. Depending on how you look at these things and depending on your fundamental biases, some people would say this is head and shoulders. This is the start of a new downtrend. There's all different types of arguments you can make. I think what's clear is there's key areas here at 6,500 on the S&P 500. Wouldn't want to get below that, at least if you're trying to sell. If you're trying to buy, you're looking for a break below 65. You get a break below 65 on S&P and you are doing dances because you've got buying opportunities probably all the way down to 58. Complicating the situation, which we'll talk about here in a moment, is Nvidia reports earnings next week, and that basically can re-accelerate things to the upside. Here is an absolutely beautiful chart that you do not get these opportunities with these Mag 7 stocks very often. Here we are. We've got a mega uptrend with this one that has been intact, or it really started all the way back in 2023, and it has been intact. I am on a daily view, which means when we get to the bottom of the channel down here, it looks like we spent days over the past 2 or 3 years at the bottom of the channel before the stock has found footing and then moved higher. Here we are with Meta at the bottom of the channel. If you do not like to see stocks go down and you want to have a level of risk management, you have this previous lows at Meta at 473. I know that's a decent dip from where it's at, but that is the technical area you would not want to break through. You break below 470 on this one, and I think it brings back in this cluster of highs down into the $300 range. The more likely scenario, based on this technical pattern, is the stock finds footing in this range and then moves higher, not necessarily in a V shape. Could be like what we've done in the past, where you find some footing and you consolidate for a long period of time before you re-blast off. Meta's got some fundamental things, product announcements, large language models that really hit, product integrations, and if you want to spend maybe 30 minutes kind of reading through what they're doing on the ad side, this is super impressive stuff. These are opportunities that are not handed to you. It's not easy buying Meta at these levels. Every article that you read about them will be negative and why they will fail at this level, but 9 times out of 10, companies this size do not fail at these levels. Now, moving on to Apple. It was in the place that Meta was in. It was in the dumps. People were doubting Apple's AI strategy, everything, and they haven't figured AI out. They don't have an AI strategy. Their AI strategy is to call Google. And look what? It didn't matter. Their core business, which is selling phones, is on fire, and this thing has rallied. These are areas where if you want to take profits with Apple, this is where you can do it. Not necessarily on your whole position, but if you want to shave off and rebalance and those types of things, this is an area where you're looking to do it. The way I prefer to do it is to move the stop loss. To give you a little bit of a spoiler to our subscribers over at Equity Empire, we recommended buying Apple very heavily down at this area, and we continue to move our stop loss all the way up. It is somewhere underneath this area of consolidation. You break this area of consolidation down into the 260s with Apple, then it probably means this was the top. I am not trying to get out at the top. I am not trying to get in at the exact bottom. I am just trying to get in at the zones which tend to hold technically, and that's exactly what you want to do. Now, Amazon. We talked about how after earnings, we blasted up through highs, made a nice move. This one got reversed very quickly. It's going to find some support down here in the 235 range. This is a new higher high confirmed with higher low. I mean, this is as clear a day as uptrend as you're going to see. Now, it's a little wider. It's not as clean as the rest of these stocks. It's a little more volatile, but this looks beautifully technically. The further Amazon pulls back, it is a smoking hot buying opportunity. You should have support here at 230. You should have support in the 211 range. A dream scenario is this market continues to sell off and you get this one back at 200. That would be a dream. Now, Netflix. We talked about in the past that this stock was the first out of the downtrend. This was after the 2022 drop. This was the first stock out of that downtrend, and this was the first FAANG stock to reverse from the highs. It made its highs back in July and really hasn't recovered those. In fact, it hasn't recovered those. It's made a steady series of lower highs and lower lows. However, it converged, which I don't have on here, with the 200-day moving average. I just slapped it on there. It's this dark blue line. It bounced off there, and then we had the news today of potentially making a bid on Warner Brothers. This one's going to bounce around and trade on that news, but if it can hold this level in like $1,000, I know we've got a stock split, I think, coming with Netflix. It might even come as soon as next week. So after the split, anywhere in that $100, even as low as like maybe like $80, $85, $90, that's good enough. If you can hold that level with Netflix, you have a good shot at resuming this uptrend. Now, the stock, everybody is going to be having their eye on. Every 5 minutes on financial media, they're going to be running a segment on Nvidia reporting their earnings. This chart looks absolutely phenomenal. You have confirmed a new series of higher highs. Even after this week's drop, you have a beautiful series of higher lows. If this level holds, which is right in the 180 level, you somehow power all the way back up. The upside is all the way back up to 217 here. If you were to break through this level, it would be somewhat disappointing from the micro trend perspective, but you would have support of the 200-day moving average, which is down in like the 160s, 170s. You'd also have support a little further down of the all-time high, the previous all-time highs back at 150. So you have support all the way down like $40 on this one, which would be a huge drop percentage-wise. I'm not saying that happens in one day, but let's just say we start to trade sideways with Nvidia. It could retest those areas. The upside is all the way back into the 220s. Now, moving on to Google. You have been on this breakneck trend, which I'll turn to kind of an orange line. This line is held with Google, but you're not expecting it to hold. In fact, you are hoping with Google that it breaks through. A retest at 260, if you're just dying to get back into this one, 260 is a buying opportunity further back, and I'm talking very quickly, all the way back to 209. That is a good opportunity. Microsoft. Talked about how you want to see this one technically. Clear support has now developed for the shares at 490. We'll call it even 500. We've bounced off that level multiple times. You've made a double top on this one, but what could happen with Microsoft, because they have so many things going on, is that we could be trading in this range for a while, honestly. You could be testing 490, retesting 550, and it wouldn't surprise anybody that Microsoft trades in this range. If you break 490, you're coming all the way down to the 470s, and I think it's going to be a tall task to get this one above 560. And look, if Microsoft breaks above 560, the rest of these stocks are off to the races. Now, Tesla, very interesting technically, was not able to break above the 480, so you have a similar pattern to Microsoft. However, you are still very much in an uptrend, and you're converging on the 200-day moving average. If you're dying to get into Tesla, you believe the robot, you believe the autonomy story. If you believe that, and honestly, I actually believe it myself, these are your opportunities. Now, I bought Tesla a long time ago. I don't necessarily need any more shares of this one. But if you are trying to build exposure, this is an area. It's not a smoking hot buying opportunity. Ideally, again, this one's very volatile. I don't need to say that. Below 300, it is an even a better opportunity. But right here at 400, again, fundamentally, valuation, it doesn't make any sense. But if you have the forward thought of the optimists and the autonomy, and you believe those are going to be big businesses, which they certainly could if they execute, then 400 is your first area, technically. Folks, that was the FAANG Stock Recap Show for Friday, November 14th. I hope you all have a very safe and fun weekend. It's been raining here in California. I hope where you are, the sun is shining. We are just 5 days away from Nvidia. We'll see if the sun shines on Nvidia and the AI industry, or if we get deeper pullbacks next week. Stay tuned to the blog. There's a link to this down in the description below. I'm going to be publishing a couple more pieces on CoreWeave, Nebuous, and IREN. I'll be doing this over the course of the week. I believe we're out of the hype phase of AI. I wrote that to my clients today over on Equity Empire. I said, I think it's over. I think the easy money is over. Now the work has to be done. Every data center company, every AI company, every semiconductor company is not going to go up. They're going to have to execute. They're going to have to be in the right markets. They're going to have to be good from a stock perspective. That is going to require lots of research. I think some of the research you can do this week is you can read this blog on Meta when it comes to AI recommendations for advertising. I think this is something very important that you should understand, and take time to read this Microsoft AI strategy and how this relates to the other hyperscalers and the data center business in particular. If you start understanding and piecing these dots together, you'll be early on the next Oracle. You'll be early on the next Nebuous, which is what we've been doing for our clients over the past year. And obviously it's great to do it in the past, but now the job is, can we continue to do this? We recommended Nebuous last year when it was like $30. We recommended Oracle at $130. How do we keep doing that? And I think you keep doing that by doing heavy amounts of research, connecting the dots, and understanding that the hype phase is over and the execution phase begins, and only a certain number of these companies are going to be able to execute. And the more you understand them, understand their business models, understand how these AI models are working for the company, the better decisions I think you can make. Hopefully you enjoyed today's video. Be safe. I appreciate you all. I'll see you again soon. Good luck with your investments.